Hey, thanks for tuning in. This is a weekend review of the stock market for the week ending April 14th, 2022. April OPEX is done. And now we are on to the real move. I do believe that in the coming week, at most 2 weeks, which would align with end of month, we're going to see what's in store. Obviously, inside month, this structure is still technically in play. No reason price can't come all the way back down to the bottom of the range at 415. Closed at low on week, closed below all the moving averages, a clear rejection at a cluster of the 20 and 40, a confluence, whatever word you'd like to use. The reality is there's still a gap up here on the weekly that they couldn't get to, couldn't fill. Maybe it's because they're going to go higher. I don't know. It doesn't really matter. At this point, the momentum is down on all the time frames that I care about. Right? Lost the 200 and a very, very, very obvious channel on the hourly. This is going lower. Full stop. There's nothing else to talk about. Right? It's been going lower. It will continue to go lower. Until when? Until the bulls decide to buy it again. And not the bulls that, talk on Twitter, but like the real bulls. So at 425, you got this potential inverted head and shoulders. You got this potential uptrend. You have the POC, right, going back a long, long, long time. So there's some value here at 437. We did break this downtrend. PPO did not set a higher high. And now it's back at the zero line. So from a structure standpoint, A, B, C, I don't know why that can't have, have completed already. At the 1, 2, 3, 6, this definitely could have happened, and that be it. Right? Big move lower. Sorry, wrong tool. Big move lower. ABC up. Big move lower. Okay? And in the grand scheme of things, this would be something like a 5, 3, 5. Whatever, something like that. And from the structure debate, it doesn't really matter what you want to call it, right? 3-3-5 or a 5-3-5. We're still looking for a 5-wave move down now, okay? And that looks like what we have. There's just no doubt about it. And this is kind of how I see this. 420 incoming. It has to happen. All the way back down here where this gap is. I mean, it doesn't have to happen. I hate using that word. But if price remains below a declining 5, a declining 10, you just had the 10 cross below 20, right? We're now below all the moving averages on the daily, all the moving averages on the weekly. The monthly is rolled over. The momentum is down on the monthly. The momentum is not up. This is a down momentum environment on the monthly. You have yourself a big risk. It just is what it is. So what we're watching for is the hourly momentum to change up. Until this flips up and gets out of this downtrend, we're looking for price to come all the way back down to 420. When will it get back down to 420? In the next week or two. No doubt about it. All right, let's move on. And by the way, if price gets above these moving averages here, 448, the clear 450 level, 455. I mean, this is obviously a breakout. And the real move will come above 460. And if this isn't the structure, and if it isn't that, then it's something more like ABC up, ABC down, 5-wave move up. So something like this. Right, here's your first move up, A. Now looking for the B back here to load the spring for the March higher. This is definitely a possibility. Would still have to retrace more. Again, we're close though. We're close. We're in that zone. So that's the bull case, just giving you both sides. From where I sit, momentum is down until it flips up. I have to view the bearish case as dominant from a technical standpoint. Let's take a look at IWM. Below all moving averages. PPO now back below the histogram line. One positive, ADX not confirming this move. And you do kind of have a bit of a divergence here that will likely break soon. So we're going to see this play out. One thing that's, not good, right? If you're a bull here, breaks this downtrend and then goes right back to it. Why? Because this line, it's not about closing one day above it. It's about finding acceptance above it. And the reality is she can't. And again, the momentum on the 65, the hourly, the momentum on the daily, everything is full blown down. Right? They can't get anything going. And if you look at the weeklies, this is just one of the ugliest charts you'll ever see. Right? Just distribution, bull trap, rejection. Okay, so until she can get above, we'll just call it the high of this candle, 209.44, or realistically 212.25, but either of those two will work. Until you get above that, there's nothing happening here. And again, for a year, price has gone nowhere. Okay, and now it's a new year, and we got a new range. That's it. That's all that's happened. So this was the range last year. Now the range is down here. And guess what? They're not going to do anything. They're just going to keep distributing as they slowly reset the monthly PPO, which is what they're doing. So give it about, at this angle of attack, about 9 more months of this nonsense right into the election season before they pick a direction. And it might be that they need the elections to be in before they decide to move. So look for distribution the entire year. Full stop. That's all. What will change my mind on that? Get above 212. Get above 209. That'll be a start. For me to get bullish, get down here at 187. I don't want you in the middle of the range. I just pointed out that we're in a range. Why would I place a bet in IWM when I think we're like exactly in the middle of the range? 50%. So there's no edge either direction. I wouldn't bet bull. I wouldn't bet bear. I would just say this thing stinks. It looks like distribution. It looks like a top. It's done nothing. It's done absolutely nothing. Right? All it's done is take your money. QQQ, trend rolling over, clear rejection at the moving averages. PPO trying to reverse, can't. ADX put in a trough at the high, not a good look. The move down is what right now has the momentum. So if I were to just look at the momentum on this chart, you can't tell me the momentum is up. The momentum is down. Right? So down on the weekly, down on the daily, down on the hourly. Okay, so I don't care what the structure looks like. I could have the same discussion here like we did on SPY. It doesn't matter because the momentum is down. That being said, look at this. We're right in that pocket where the bulls should show some bid, okay? We're there. Now, does that mean that you're supposed to buy that at that level? No. There's still a gap down here. Why can't price come down here to this gap first? Of course it can. And given how we came into this 618, 50% level already once, and then came back in again, makes me think we're definitely getting down there to that gap level. And again, the momentum is down. The momentum is not up. It's down. All right. One thing that is positive here for the bulls is that this 40 cross above the 200, these are lagging, right? 40 below the 200, very lagging. What do I mean by that? It's towards the end of the move, right? Here's where it happened. Price was at 357. The move ended 2 sessions later at 370. $13. Well, we're already back down at 333. So that was an awful entry. So if you're using this as a buy signal, it's way, way, way late. The reason I'm bringing it up is not to go back and critique what you did on May 24th. It's to talk about the inverse happening right now on April 14th. We just had the bear 40, the death cross. So what I'm saying is, yeah, this move is more than half done, right? It's more than half done. Just like this move here, at this point here, was more than half done. So what do I mean by that? Any dips down into this gap are a gift. What I'm looking for is price to come into that gap, price to come down to 334, put in this inverse head and shoulders look, and then momentum to flip up. It's not get into this level and then just buy blindly. No, I need to see the momentum flip up, and then I can hop on the trade with a clear risk reward for the Qs. All right. And let's take a look at SMH, the weakest of the ETFs, and we can wrap up the ETF talk. Obviously going to break the lows, so the only one breaking the March lows. Not a good look. And when you do this on every time frame, this looks really, 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 really bad. Right? So we have a bearish divergence now. The lows from March 16th had less momentum than the lows now. The bears are, in my opinion, full trend mode and absolutely could continue this trend for some time, right? So now you've got yourself a nice little channel. And, this is the next setup, 227s, really just for a sell at 250. Yeah, this is the weakest ETF. Again, same message. Until we can get the momentum to flip up, none of this matters. None of these setups matter. It doesn't matter. Price is still going lower. You can't be a bull. You can't ignore the trend. Same thing here. 40 cross below was basically at the end. I think we're at the end. All right. That's what I'm trying to tell you. I think we're due for a bid, but in the next day or two. And we tried here, right? Momentum flipped up. The bulls tried. Look, you even see it in PPO. They're trying, but they failed. They capitulated. And now the next technical setup is a double bottom. So looking to catch a bid here, and pretty much all the indexes probably by Tuesday at the latest. Whether or not they break this low will tell me something new either way. The strongest ETF still is XLE. There's nothing wrong with this chart. Sorry, nothing wrong. Could continue higher. Bull flag target 101. Time of the move should be about, over half done. So we're at the latter half of this move, just to be clear. Still have this obvious trend. This looks like an ascending triangle to me. And here, let's just get rid of that and draw a new one. That puts the target up here at 91 bucks in the short term, as long as it remains above these moving averages. I love this trend. It's such an easy trend to follow. You don't need to think like all these other ones. Had a clear base back here. So during a correction, we are looking to defend the $60 level. A much longer term uptrend. I mean, clear as day. XLE continues to be the place to play, and APA is the leader. So this is the one that I like to play. Momentum full up across the board on all time frames. Sit back, relax, and enjoy the ride. We are mooning. There's no reason APA can't go back to $65. Just absolutely not. And this 510 look is exactly what you want to see. So as long as you're above the 510 like this every single week, you're like, I don't know, can I buy this? It just seems like it's so high. Yeah, because look, it just keeps going higher. When we get below this yellow line, then you don't buy it. until we're below the yellow line, keep buying APA on any dip on the daily. And there's nothing wrong with that. That is the play that has worked for the entire year. And let's go look at, first off, Q2 performance. Q2 performance here, SOXL leading the way down, XLE at the top. The only things positive in Q2 are all defensive. These are all defensive. And going back on the year, this is the same narrative. SOXL down 63% on the year. 63%. APA up 57%. XLE up 44%. Gold 30%. GDX 30%. GLD 9%. Right? The leaders, same leaders, all defensive commodities. Right? The two that stand out are EMPH and Airbnb. All right, those are two that stand out for sure. But everything else, Nvidia is down 30% on the year. ARK is down 37%. So, this is just one of those years where it's flush everything that's an equity, flush bonds, and the only thing that goes up are commodities. And so energy stocks, gold, things like that. And then the value plays that are the Costcos are doing very, very well. So if we go back here, let's wrap up the video with just Bitcoin. So just before the video started, the hourly flipped back down. This is a bunch of whipsaw, as you can see, big bear flag structure. So you're going to see the momentum flip up, down in this whipsaw. This to me looks corrective in nature, this entire move. This looks corrective, making this the dominant move, right? Same way I showed you on SPY, putting this pattern here in play. I don't see why this can't play out. But again, for this to validate, you have to get below 34,000, and you definitely have to get below 32,000. And until that happens, this could just be a big base of support, right? And I know this isn't what people want to hear. People love V-shaped recoveries. But the more common way to get out of this is to base, like she did when she came down here, right? Comes straight down, goes sideways, base, breakout, back test, breakout, back test, right? This back test failed though. And that's when you knew that this basing that was taking place ended. So now we're back trying to base again. So this again looks like a bear flag, looks like an ABC up, looks like another move coming down, but down to the 27 level, 20,000, somewhere in that range. That definitely could happen, but we don't need to guess. There's no reason to participate. There's no money being made here. The only money will be made when you can get above this $46,000 level that's been identified from the February 10 pivot, or get below the January 23rd low. That's it. Gold marching higher. PPO reset to 0. Bull cross. I do have the ABC structure up here, just like you saw. And this I don't like at all. I don't like how everyone came up here and bought, and now everyone who bought up here at the top is in the red. Now I get it. This is gold. That could be how this stuff works. I don't know. I don't like how this looks on the daily time frame. I could see price, broadening out, right? So an ABC up, come on down, expand down here, come on back up. If she gets below this level here, 180, she could be heading back down to the bottom of the range. My point is I want to see lots of volume at the bottom. I want to see this candle down here. I don't want to see this candle at the top. That makes me very, very cautious. And when you look at the weekly, look at that. That doesn't, maybe that's, again, right? Maybe this is just some one candle doesn't make a trend. The moving averages here look beautiful. This looks great, right? Collecting, go. Back test, go. All right? That looks fine to me. But what what will be the tell for GLD is this 185.09 level and the low of 181.11. And from a momentum standpoint, momentum is up, right? I mean, the hourly, could argue is down, but the daily's flipping up, right? The weekly is up. The monthly's up. I mean, this monthly could be flipping up here, and you have yourself an incredible move setting up in gold here. Incredible. Right? This is what's been talked about all the time. So if they can get above this candle here, it's go time. Absolutely go time. But I will say this has me a bit cautious, right? These marginal new highs and then sell-offs, very cautious. I want to see the new high get bought for this pattern to validate, especially with the daily looking this way. Let's take a look at TLT. I know the video is getting a bit long now. So, absolutely slaughtered. Just absolutely slaughtered. But, going back to all the data I have, 2000 to present, 20 years, if you put the volume by price marker all the way back here at the start, you find that the value level, this point of control, is 121, 122, right where price is. So it's a good price. Momentum has reset to negative. Okay, all the big rallies start when momentum is negative. It doesn't mean they're going to start from here. I'm just giving you a data point. They all likely, you get a thrust higher, then momentum reverts negative, and then it thrusts higher, then it reverts negative, then it thrusts higher, then it reverts, thrust, revert, thrust, revert. Thrust is what's coming next. Okay, we're looking for a bottom. We're not looking for this to continue. We're looking for TLT to bottom. That being said, we don't have any evidence of a bottom anywhere. And when I see these types of moves, these plus or minus 2 standard deviation from mean moves, what I look for them to terminate is really simple. I'll give you right now. I'll give you the hint and the answer. Right, we're below the bottom of the Bollinger Band on the monthly, on the weekly, on the daily, okay? Not on the hourly. Oh, on the hourly. Okay, so every single time frame is below the bottom of the band. Every one. So what we need to see happen for this to end and for us to get aggressive, because I started scaling in on this little base, but the base broke bare. So on any rally here to start the week, if we can't get it back above 122, I'm exiting this position and waiting for momentum to flip up before I can get back in. And ideally flip up on the daily time frame. Because what we want to see on the daily is for price to get back to the middle of the band and then get on top of the band. Just like she did back here. Just like she did here. This was a chance for the bulls to take the ball back. But it failed. Absolutely failed. But that's what we need to see happen from a technical standpoint. Right? We need to get back inside the band and then above the middle of the band. And until that can happen, we're not going to flip the trend up. Right? Price won't just magically start going up. It needs to reverse this extremely strong downtrend. And there's just no other way, which could be an expanded ABCDE, whatever. I don't know. Which is kind of what I'm seeing now. The more I look at this, right, this thing should probably come down here to 108. From a structure standpoint, something like 3-wave down, 3-wave up, and then 5-wave down. Something like that. So that is also, from a structure, what could be in play here. Just to keep it on everyone's watch list, though, because when this bottoms, it will get a massive rally. And it will likely align with when the stock market rallies. And what's been interesting is these things historically are not. So like, let's take a look at this. SPY versus TLT. Right? SPY is winning. It's not even close. And if you make it, like, forget the candlesticks. Let's just look at a line chart. Right? If you own SPY, going back to the COVID crash, you've done very well. Now, is this going to happen forever? I don't know. But historically speaking, these two are inverted, as you can see. All right. One goes up, the other goes down. And so SPY's been going straight up during this entire 2018 to 2020 correction. Everyone was in bonds. There was a flight to safety. Now price is correcting that move. And in doing so, put in a bearish divergence in momentum. Again, this thing could be heading to 108. There's just no other way to talk about it. And with that, I'm going to end the video. I hope you like the content. If you do, hit the like button, subscribe to the channel, share the content, check us out in the next video. And yeah, thanks for tuning in.